last Polkadot analysis was on the money. But what should we expect next? Are we due a correction and is now not a great time to buy? Should you be taking profits and being patient for a better time? Well, that's what we're going to look at today in today's video, using technicals, using Elliot Wave, using Fibonacci. So if you like today's video, like, subscribe, hit the bell notification because I'm here to serve you. And if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading currencies for 15 years, Forex markets mainly, but last 4 years exclusively focused on crypto and blockchain. Featured in the best-selling book, High Probability Trading Strategies, back in 2008. So let's dive straight in. So on July 25th, we did a video. Said, look, it looks like Polkadot is making a wave too low down here, A, B, C of a wave too low, and we should anticipate a move to the upside. And the title was, is Polkadot ready to 10x? And in other words, it's saying, look, we've got this bullish momentum reversal, we've got price, we've got time, we've got pattern. Therefore, there's a confluence of events saying, look, we should anticipate a move to the upside. That's what the probability states. We are in the game of probabilities, not certainties. So important. And 50, 60, 70% of the time, when these patterns unfold, we can predict with high probability what's likely to occur. So would you like to see what actually unfolded? Well, let's have a look. So picture this, screenshot this in your mind, right? In fact, we can maybe even zoom in. Can we zoom in? We can zoom in, right? So we set this low down here, right? Boom. And what happened? Bang, just bang on. Just bang on. It was literally this day that we did the video. We posted it on the 25th, but the video was recorded on the 19th or the 20th. And we can see right from down here where that pattern is, this little up down. Yep, that's exactly what the day was. Bump, bump. And we said, look, it's looking like it's a low. There's a 1, 2, 3, 4, 5 wave count, a wave 5 over C over 2. By the way, I've recorded a free Elliot Wave and Fibonacci masterclass, so you can learn how to do this, because it looks magical when you don't know the method behind the madness. So because I can only cover so many coins, I thought it's best if you can learn this to do this for yourself. So we go over how to do this. So now let's look at, are we due a correction? Like, what should we anticipate next? Because we said here we should anticipate a move up and then a move down. Well, a few things. First of all, this was the initial point that we want to have see a close above, which we drew over here. That gives us confidence. But we smashed past that, right? We smashed past that. And then we got to here, which actually, if we look at the next swing high, we've actually just tagged it, closed above it, and now fallen beneath it as well. So what should we anticipate next when it comes to Polkadot? So first of all, let's go to the top left, look at the weekly momentum. Well, the weekly momentum at the time of the last video was bullish, right? It was in this zone, right? So we said upside, sideways to up, and we got this amazing move to the upside. And now the momentum is bearish, meaning the blue line is crossed below the red. So it's like the steam has run out and we should expect sideways to down. And got to remember, markets are like sprinters. They sprint, they run out of breath, and then they need a breather. They need a rest. So often corrections are often called breathers, which means a breather before the next sprint, right? Breathers are healthy. Breathers are a good sign of a healthy market. So, but the momentum tells us when we're likely to see a breather, aka correction. So we hit the time analysis. We can kind of delete this. We're not going to delete the question mark yet. Why? Because we want to see this high get taken out over here before we can really kind of confirm the wave too low. But at this stage, we know it's just highly probable, right? So we should now anticipate a correction to the downside. That's what we should look at. So let's just also just jump into an hourly chart. Just want to see if there's a clear pattern here. Yeah, so it looks like a nice, if we look at it this way as well, there's enough information that's telling us it does look like a nice wave 1, 2, a nice wave 3, 4. We can do sub-degree counts as well, and a 5. We've had a significant move down, which would suggest that this move to the upside has been complete. Let's just jump onto the momentum indicator as well. We also want to just look at the fact that we've got a bearish daily reversal. Yeah, so there's dual momentum. Weekly is bearish. Now we've had our next bearish daily momentum reversal. Also, there's a divergence, meaning price has been moving up and the momentum has been running down. That's a sign of weakness in terms of it's due a breather. So we've got a few things telling us the same thing. So let's just actually just do two things for today's video. Is let's just do a Fibonacci end of wave 5 projection on an hourly chart. I've gone to an hourly chart because you can see the waves are much clearer on an hourly chart. Whether we're using candles like this or the line chart, pretty much gives us the same information. You can just use whichever suits you best. I'm going to stick with for the lower time frames, I like to use candles. We're going to go into Fibonacci extensions. We're going to measure wave 1 to wave 3. Again, I covered this in the masterclass. Typical wave 5 is a 62%, so it's in this region. We want an external retracement. In fact, sorry, let's do a wave 1 as well. Wave 1 measured, projected from a wave 4 low. Typical is 62% and 100%. So you got the 62% zone, you can see that here. And then last but not least, just keeping it nice and simple for today, is the external retracement of a wave 4. Typical end of wave 5 is 1.272 to 1.618. So we've got this region here, and we can see that it's tagged the price over here. We've had a relatively significant move to the downside, more looking like a 5-wave structure. So this could be the beginning of a correction. So now let's just focus on what should we anticipate. If this here is the high, if this is the wave 5 high on a shorter term time frame, we're talking about a couple of weeks, what should we anticipate and for how long? Right, so let's now just keep it focused on this. So let's just say we're happy with this. We can put a question mark on this wave 5. Let's just delete these now. Keep the chart nice and clean. We can delete this as well. We can delete this also. Let's just do a couple of things. Make sure we're on the same page. Let's put a nice question mark. So it's not confirmed, but it's likely we have the opinion. Good to have an opinion of the market, but knowing we're not fixed on that opinion because we're working with the game of probabilities. So we should anticipate a 50% correction. Right, so we're going to take this low. Let's do it from here actually. To this high. Make sure I get the top. And then we want 50%, 62%, and 78.6. That's a typical wave 2 correction. We are anticipating that this is a wave 2 low, so we shouldn't see the market move below this low here. So let's just make this into a thick line. So we're expecting this to hold. That's if it breaks, that invalidates the wave count. If this breaks like this, then that invalidates this wave count and we have to reevaluate. But we can anticipate it's probably going to get into this zone. How long does it take? A typical wave 2 correction takes 50% to 100% of the time taken to form the wave 1 itself. So this is how you do that. Bump, bump. It's quite broad, but at the same time, we can go, right, this is the zone that we have. It gives a really objective time and price zone saying, look, we should expect Polkadot to move sideways to down at least until the 5th of September. That's a couple of weeks. And the typical maximum of the 20th of September. So almost sideways to down for 2, 3, maybe even 4 weeks. Anticipate that to coincide with momentum. So movement to the downside. Oh, if I can click it here, let me just do it like this. Momentum to the downside. For the first wave, you'll probably get a momentum to the up. And then a final one to complete the correction. Something like this. Look, something like this. Obviously with the blue and the red lines. And then price will probably do something similar that will marry up. Again, similar to an A, some type of B, and finishing off. We should always anticipate a minimum of 3 waves, something like that, before we see a continuation, right? Because in the last video we said, if I just zoom back out, we said, is Polkadot ready for a 10x? Right, what we were referring to was just a new reversal here, nice breather, and then boom, move to the upside. And that's what we drew here. And move to the upside, we're looking for a breather. And then I think in the video, I drew like some projections just on a macro degree count. So you can check out what we projected the last time. But for now, I want you to just keep it really, really focused, bang on the money with the analysis. But now is the time to anticipate a pullback. So if you haven't bought Polkadot and you're looking to buy, the price range of $19 to $14, give or take, between the 6th of September. So be patient until at least the 6th of September. It doesn't mean it's guaranteed, but we're always working with probabilities, and that's how the game goes. And then typical maximum of the 20th. So if you like today's video, like, subscribe, hit the bell notification. Tell me, what did you find most valuable from today's video? Because the last video was just bang on. And if you managed to take action, you know, the price went from $11, $12 to as high as $28. So it's like a 2.5x. So we should expect a 50% correction back down to the $15 range and then move to the upside. Let's finish with a quote from the book. Let's just choose a random chapter. Let's go for chapter 1. Let's see what was chapter 1. Chapter 1. All right, let's see if you can guess who this is. So this is the quote in chapter 1. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Have you guessed it? Michael Jordan. And the message here that I'm taking from it is, hey, to win big time, you have to be prepared to lose. We don't lose deliberately, we don't fail deliberately, but it's always a possibility. And investing and trading is no different. You know, we make our decisions, but look, the nature of the markets, it could just explode up, it could explode down. Hey, but we always work with probabilities and what happens most frequently. And we put in the practice of identify this. So do take my free Fibonacci and Elliot Wave masterclass. I've really put in a lot of work for it, so you can start doing this analysis for yourself. Because I can't get to all the coins, you know, I'm getting inundated with requests. I do my best, but I normally only do around 7 videos a week. Enjoy. So if you like today's video, like, subscribe, hit the bell notification. Have a great day, and I'll see you soon.